Okay, hello everyone. Welcome back to this weekly stock analysis that I'm doing here on YouTube. I always ask my listeners to tell me which stocks they want me to analyze, and on YouTube, Panu 2022, which is the screen name, obviously, he asked me to analyze PPG. So let's log into this spreadsheet of mine and fill in PPG. It's a big company. It's actually a leader in painting and coating. So they sell all kinds of, as you can see, they are in the specialty chemicals industry. So they make coatings for your house, protective coatings, but also decorative coatings. So what we see at a first glance is that PPG Industries doesn't score a really high score. I mean, 66 out of 100 is not that great. You see a couple of red things here, so let's see what's going on. I always like to go to the graphs first because they give you a really visual way to see and to tell what's happening with a business. Well, the first thing I notice when I look at these graphs is that they are not really stable. They are fluctuating and going up and down, which is all right, but you prefer to see just a steady line here. However, if we see, for example, the earnings per share, which is obviously also related to the return on equity, you see that there's a huge spike this last quarter. So also, if we take a look at this stock on for example, Google Finance, then we see that in the news section, the first thing is that PPG posts record third quarter sales. So yeah, they are doing quite all right at the moment. They also completed an acquisition just a couple of hours ago. So they are really active at growing their business, and they are succeeding apparently because they're posting record sales. And that's why you see this spike here. Also with the net profit margin. So that's a good sign, right? So they are becoming more and more profitable. We do see an increase in debt, which is not always a good sign, but let's see if it's manageable. We'll look at that later. Current ratio, not amazing because you prefer a current ratio above 2, but still it's all right. And at least the trend line says it's increasing. This is a good sign though. The dividends are steadily increasing, and also this company, PPG Industries, it's on a lot of these dividend aristocrat lists. And a dividend aristocrat is a company that is consistently paying out dividends over the years and also increasing them. And PPG is definitely one of them. Also, you see that the shares outstanding are declining quite rapidly, so they are buying back shares, which is creating value for shareholders. Book value trend line is going up. That's good. So that means, it's one indication to tell, like, okay, the company's assets, the company's value is increasing, even though the book value is not the same as intrinsic value, which we'll look at in a minute. It does give you an idea of if the company is growing or destroying value. Okay, so let's take a look at the dashboard once more. We see, for example, that the current ratio, as we said, it was all right. It's average. It's between 1 and 2, which is all right. Let's take a look at the financial health tab, which is always an interesting one to look at. What we see here is that this is good, right? Accrual profit, this is just the net income. Defensive profit, it's sort of similar to free cash flow. And what you want is that as reported earnings are increasing, that the free cash flows are also increasing, because in the end, you can't have earnings without cash flow. So some companies just report increasing earnings, but they actually don't have the cash flow to back it up, which could be an indication that they're manipulating their earnings, which is definitely not the case for PPG. So that's a good thing. Altman Z score, which is a interesting score created by an a scholar, an academic who figured out this metric and to actually predict whether a company has an increased chance of going bankrupt. Well, if this score is above 3, then it's a good sign. There's very little to no risk of the company going bankrupt, and it is above 3, so that's good. So everything seems all right. The enterprising profits you prefer, yeah, it's something it's too much to explain in this short video, but you can search on my website valuespreadsheet.com to learn more about it, about earnings manipulation, and I explain the enterprising profits there. But you prefer to see them above 18%, and they are almost there, so it's all right. However, yeah, you do get the red flag on the dashboard because it's below the 18%. But if you take a closer look, you see that it's all right. There's also another website I want to show you guys, and you probably, or most of you will probably know it. It's a pretty big website, but I always like to go there to get some extra information. It's called fool.com. It's a bit of a strange name, but the Motley Fool, they have a lot of interesting articles there, and also this, yeah, they call it their Cups community. And yeah, there you can, people can say, well, I think this stock will outperform or underperform. And what you see is that the great majority thinks that this stock, PPG Industries, will definitely outperform in the future. And this is also a very interesting part because the community members can actually post some comments here. They call it pitches, just to say like, okay, this is the reason why I think they will outperform. Yeah, so I mean, here PPG is making its mark as a leader in the coating and painting industry. I mean, their main strategy is to gain a competitive advantage via acquisitions. I mean, those are things that are just interesting because these people, at least some of them, will have really studied these companies and then very interesting pitches. So I recommend you register for this website. It's free. Then you can access this CAPS community and you can read just some extra information. And these comments have really led me to sometimes purchase really great companies, or when I thought I had a great company and I read some of these comments, I thought, wow, I didn't think of that and I didn't know that. So then I stayed away from it. So I definitely recommend this website. As you can see, they have this rating system as well. So many people say outperform, so it's rated 5 out of 5, which is a good sign. But now let's look at the valuation. Because even if you have a good company and it has its flaws, I mean, it's not perfect, but the main thing is you can buy a great company, but if you purchase it at a really high price, then there's not much return to be made. And if we take a look at these valuation models, these 3 valuation models, we see that the average valuation is 156, and the current share price is $203. So that means it's overvalued by about 23%, with respect to its intrinsic value estimate. And that means that there's not much money to be made here. If you purchase now, your expected return is 3.3% a year. That's not much, and I definitely do not recommend you purchase this stock at this moment. As you can see, the max purchase price is around $96. So that means that if you want to earn 20% return on your investment in this particular company, you must wait until the price drops below this max purchase price of $96. And I don't see that happening soon. So even though it's an interesting company to keep on your watch list, I wouldn't purchase it at this particular moment. So thank you for listening, and you can download actually this dashboard analysis as a PDF in the description of this video. And I hope to see you next week. Please let me know which stock you want me to analyze in the comments. Thanks and bye.